Carbon accounting is looking at quantifying emissions to the atmosphere, and it can take a number of different forms. So physical carbon accounting is looking at methods for quantifying physical quantities of greenhouse gases, and the unit of measurement is normally a mass term, like tons of carbon dioxide or kilograms of methane. And distinct from that is financial carbon accounting, which is looking at the financial value of carbon-based assets and liabilities. For national level greenhouse gas inventories, typically countries look at all of the emissions that occur within their geographical boundary, and then they can then set targets for how they would like to reduce those emissions over time. We have methods called consequential methods, and they can be used to appraise or evaluate how effective a climate change mitigation action has been in reducing greenhouse gas emissions. So, for example, if a business or a government is introducing some kind of measure to reduce its emissions, it can use that form of consequential carbon accounting to calculate the size of the reduction that it's achieving through the decision or intervention that it's taken. There are examples or circumstances in which seemingly beneficial actions have unintended consequences. And so one prime example of that is bioenergy. On the face of it, it looks like an option that will reduce greenhouse gas emissions. But if you look at the system-wide consequences of incentivizing bioenergy, there are good reasons for thinking that actually it might increase system-wide emissions. So if we increase demand for bioenergy and biomass, that increases the price of the commodities that are used in delivering that bioenergy. And what we expect to see is that producers and farmers around the world respond to commodity prices. If they see those prices go up, they'll produce more. And one of the ways in which people produce more is by converting potentially high carbon stock land to agricultural use. So if you include the emissions from the land conversion in the assessment of the change caused by the bioenergy decision or policy, then we can end up with circumstances in which bioenergy actually increases rather than decreases system-wide emissions. And carbon accounting is very important for identifying exactly those kinds of cases so that we put our efforts into mitigation actions that do actually achieve reductions. Government policies like the EU Renewable Energy Directive is based on inventory type greenhouse gas accounting. And those types of methods don't tell you about these system-wide consequences. So the kind of research that we do looks at these issues and tries to make recommendations on how this carbon accounting practice can be improved so that that misleading information doesn't continue.